I'm Donald Leggett, and welcome to the latest London South East CEO interview. I'm joined today by Tony Hawkins, the relatively new CEO of AIM-listed Sterling Energy, ticker SEY, which has decided to refresh its strategy as a West Africa oil and gas explorer and producer. The company have made two major announcements. Two long-term shareholders have sold up, and Sterling has taken on two new executive directors, both formerly senior managers at Tullow Oil, both with considerable Africa experience. Welcome, Tony. So it's been a busy time for you.
Yeah, hi, Donald. Nice to see you again. Yeah, it has been a busy time, and pleased to update the market as to what's happened.
Okay, well, let's kick off straight away. Let's start with the new strategy. Talk us through where you see Sterling Energy in a year or two's time. How do you see the future?
Yeah, sure. I think it's important to recognise that Sterling, in terms of a new strategy, Sterling's always been an oil and gas explorer, and our base historically has been Kurdistan, Mauritania, West Africa in general. We drilled a well in Cameroon. We had some exploration acreage in Madagascar. We've now got exposure in Somaliland, so we're quite well versed in Africa and the Middle East and North Africa. So it is a continuation of the strategy, really. I think the important thing is that we've got a new executive team that's coming on board. We'll be refreshed with a new board and a new strategy to try and grow that portfolio that we have and build on the legacy that we've had in the past.
Okay, let's break that down into chunks. Let's take the two executive directors. You've got some major hires there. The former CEO at Tullow Oil, and the other chap is an EVP at Tullow Oil, each of whom has a great deal of African expertise, both in terms of development, exploration and development. So
and that's really important. I mean, I think it'll be a very good fit. We're very much looking forward to welcoming Paul and Ian to the board, and that they have in Africa in particular. They've got a long track record of growing businesses and growing Tullow into a very successful business. So we'll be looking to try and replicate that at Sterling.
So are these full-time positions, and what exactly will the new hires be doing?
Yeah, definitely full-time positions. I mean, we're still in the midst of doing board composition and making sure exactly that we have the right mix of people and skills. So that we'll update the market on that as we go forward with that strategy. But very much full-time. Very much looking forward to working with them to help on the next stage of the company and hopefully lots of growth and lots of opportunities going forward.
So things have changed quite radically, and as I understand it, Leo Coode, your old chairman from Columbus days, is a senior non-exec. Now you're on as CEO. So what else can we expect?
Yeah, well, I mean, I came on relatively recently, so I joined the board in January. I had some history with Sterling. I'd worked for Sterling previously in the past, so I know the company well. I know the assets. I know the people. And more importantly, it's got a very strong financial base, which I think you need these days to compete in oil and gas. So yeah, I know Leo from Columbus. We work very well together. So we're looking forward to driving the business forward. So I think it'll be an exciting time for us.
Indeed. And why West Africa? Is it because that's the expertise of the new executive directors, or is it because it's just such an important oil and gas opportunity?
Well, I think you've hit the nail on the head there. With those two things are very important. So the experience that people have, the contacts that they have in the industry, and also the size of the opportunity in West Africa. It's still a very important oil and gas province, and we think it is fundable as well. You can do projects in West Africa. So those things all go together, I think, to make it the obvious choice for us. But we will look in other jurisdictions as need be, but I think that will be our core operating area, our core area of expertise.
Would that include Nigeria? Because I hear from various people, it is some people make a great success of it, but it can be a difficult place to work.
Yeah, I mean, I don't think we'll rule out any jurisdiction. I mean, Nigeria, is clearly attractive from a hydrocarbons resource point of view. I think there is, issues in every country that you go to that you need to deal with. So I don't think we can single out Nigeria by itself as having problems. So I'm involved in another company that's involved in Nigeria, and it's there's some great resource, some great people there. We won't rule out Nigeria. We won't rule out any province, I don't think. But I think we'll follow, like most oil companies, we'll follow the resource and try and blend the best of the resource and the above ground regimes as well, including the fiscal regimes.
Okay, which takes us neatly to your asset in Somaliland. What plans do you have for Somaliland? And in terms of new assets, when might you be thinking of announcing a deal, or is that a little bit too?
Yeah, I think you're trying to dig in there, aren't you? No, let's
I am.
keep...
That's my job.
No, we'll keep on track. So no, with Somaliland, look, Somaliland is a frontier exploration province. We like Somaliland. We think it's somewhere where we'd like to make sure that we make a good go of. The Genel is the operator there. They're doing a good job in difficult circumstances. So we have one or two or three strategies to try and make progress in Somaliland along with Genel. But I think we need to recognise that it's been a tough time in oil and gas for a few years now, since 2014, 2015, and now with the pandemic last year. We need to make prudent investments, and we'll progress Somaliland as quickly as we can.
The second major announcement was about two long-term investors selling up and moving on. Now, those were Waterford and Mistyvale. I don't know too much about either of those. So who are Waterford, who are Mistyvale, and why have they chosen to sell rather than back the new strategy?
Yeah, okay, sure. So Waterford and Mistyvale are two long-term institutional shareholders, long-term supporters of the company. They came into the Sterling in 2009. They helped recapitalise the company and saw us through a number of exciting joint ventures. We drilled a well in Kurdistan, a well in Cameroon. We had joint ventures in Mauritania and Madagascar. And then we entered Somaliland also while they were our supporters. So we're nothing but thankful for their support over the years. They've been very, very good to the company. I don't think it's appropriate really to speculate on why they sold. I think what we're grateful for is that they've supported us. They've now decided to sell to a group of institutional investors. So we've broadened our shareholder base, and we've retained the cash that we have in the company, and we're ready to move on to the next phase. So really, nothing but thanks to Waterford and Mistyvale for their support over the years.
So 2 points to pick up on there. Who is that broader institutional base, and what's Sterling's up-to-date funding position now?
Yeah, so the broader institutional base, it's basically the 45% that was sold has been now split up into about 20 or 25 different institutional shareholders. They're all major institutions who invest in a wide variety of oil and gas. So we'll have a more diverse shareholder base now. We'd hope to try and increase the retail element over time. And then secondly, in terms of the cash balance, we put out a number the other day. We said at the end of November 2020, it was $42.9 million. Our spend since that date has been consistent with our normal G&A. So the rough ballpark figure I always work to is that we have roughly $40 million to spend on a new venture to grow the business. So
you're in a very good position, really.
Yeah, I think so, and I think we've made some changes in the first part of this year. I think that we've seen the market starting to rebound as well in terms of the oil price. So I think we're in a good position, hopefully, to capitalise on all of that.
Indeed. And finally, I presume you see retail holders as being an important part of that particular mix. So what's your investment pitch to them?
Yeah, sure. We do see retail as an important mix, and as I said, we'd like to grow it over time. And my pitch to them is, look, we're a well-capitalized, well-funded, well-managed oil and gas company looking for growth. If that's the stock that you're looking for, that's the risk appetite that you have, then I'd encourage you to look at our stock very closely, look at the management team, look at the assets and what our ambitions are, And please follow us. We'd like to hear from you.
Tony Hawkins, CEO at Sterling Energy, thank you very much indeed for joining us today. Thank you for taking the time to speak to us. If you're an oil and gas investor, do check out the London South East Bulletin Board for Sterling Energy. There's lots of data and chat on there. Please do think about following us on Twitter at London South East, or you can subscribe to our YouTube channel to see a regular flow of interviews just like this one. Finally, let me say thank you very much for watching, and do stay safe.